G'day guys, welcome back to Pete's Investing. It's another day where natural gas is pretty much giving us a boring experience. This is the September the 20th, 2023. And first off on the daily, we did actually break through this minor resistance at 29.73. We've got this major resistance up here at 30.50. And it actually punched through that minor resistance. And I'll talk about that more in the hourly chart. But first off on the daily, you can see there, again, for those new to the channel, we've been in this range for many months now, and we expect it to break above this major resistance at 30.50. And if it does that, our initial target area will be this closest Fibonacci range, 23 to the 38% level. And that's due to this bullish divergence on the CCI. You can see the CCI down there still rising. If I zoom out, you can see it more clearly there. The CCI is still rising, so we expect it to break above that major resistance at 30.50. Alternatively, if it breaks below this support at 20.65, then we need to see the CCI also collapse and break below that entry point to be invalid in terms of a bullish divergence. So that's what our short-term expectation is, to break above this resistance. The stochastic, again, is also breaking slightly to the upside, although it's still in the oversold territory, but it's broken above its moving average. On the hourly, you can see there we did have this bearish divergence, and it broke down and hit our target a few days ago, and that was projected. And those little projections, I keep those little target areas. You can see there, they've all been successful in the last few months. Now they've all been bullish or bearish divergence according to the CCI, and that was another successful one back there. Now, since then, the CCI has broken up, and it broke above this minor resistance, as I said, the 29.73. It's actually bounced off this trend line we drew, and that trend line was initially our entry point to hit this divergence, and that's where we drew this trend line. You can see there and I keep these trend lines in there for this sort of reason. It usually gravitates back towards those trend lines, and it did in this case. And again, it's broken down from that after hitting that trend line. Now, what you'll notice as well is, if you follow my channel, you know I do follow Fibonacci very closely. And that Fibonacci range there, you can see there it's currently resting around the 50% level. But that wick came close to the 61%. And that 61% is always a key area to look out for. If it breaks below that 61%, then we're going to see further declines, very likely, to the downside, and maybe even come close to doing the full range. But we need to see it bounce from there and head higher. But at the moment, we're getting all bearish candles at the moment, so we'll keep an eye on that in the coming hours to see where it goes. But as you can see there, we're very close to this 30.50 range, this major resistance, and we need to see it break above that to be more bullish. The CCI likewise has fallen off on the hourly and coming back towards its midpoint, so not too strong a signal there. There's no divergence to talk about. The stochastic likewise has reached the overbought territory and starting to pull back again as well. You can see there's the midpoint, so it's still in the overbought territory. So we might see some weakness in the coming days, and it may actually well penetrate the 61%. So anyway, we'll keep an eye on that and keep you up to date. But at the moment, it's inching very closely to that major resistance. We need to see it bounce off that in the near term. So to understand how to trade some trend trading strategies, subscribe to my Patreon page, where we also look at weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.